On the eve of some important economic data over the next couple of days. But the two key reports in the next week or so are the March jobs report coming out tomorrow at 8:30, and then the next Wednesday, the March CPI report. Of these two reports, I want to emphasize that the most important actually is the one coming out April 10th, Wednesday, March CPI. And in fact, the CPI report there is key, far more important than jobs. I want to talk about both, and I'll explain why I think that CPI matters far more. Foremost, let's just get some of the numbers. The street's looking for 214,000 jobs and an unemployment rate of 3.8%. And although some people are expecting potentially stronger numbers, for instance, Goldman Sachs just raised their non-farm payrolls forecast to 240,000, and that's compared to 214,000 for the street. Now, if it's a strong jobs report, I'm going to explain why this is not as hawkish as you might think, meaning it shouldn't really be bad for stocks.
Dan Ives joining us now, Managing Director at Wedbush. Why are you optimistic about tech as a whole for earnings, Dan?
I think it's going to be one for the ages in terms of digital advertising. All of our survey work, much stronger than expected. The AI revolution is now going from semis to software. So you're going to now start to see the next part of this AI revolution with a better spending environment. And Brian, I think this is going to be the catalyst that gets tech stocks ultimately up another 15% rest of the year. It starts with this earnings season.
Anybody in particular you're looking at most closely?
I think front and center is going to be Microsoft. I think in terms of what we're seeing out of Redmond on cloud, of course you got Godfather of AI, Nadella. You know,
I thought the Godfather of AI was Jensen Huang of NVIDIA.
Well, the Godfather's
the
Jensen.
consigliere.
But if you look what's really happening now in front and center is going to be Microsoft on the cloud story. And then if you look at digital advertising, Meta, I believe the one to really pinpoint is Google. I mean, we think Google here could be ultimately $30, $40 upside on digital advertising, as well as what we're seeing on the cloud side.
It won't be this quarter because obviously it was just sort of not really even announced, reported on yesterday. I think you saw with Google and Alphabet that they're going to start charging potentially for the use of AI in this. That would be the biggest change to Google's business model basically since they were created. That won't show up now, and we'll see if they even do it. So those numbers come in. Alphabet and Microsoft come in strong. If those two come in strong, is that kind of the all clear for a lot of the other names that you cover?
I think this is now going to start earnings going higher, growth going higher. And because that's what really needs to happen. It's not just, we could call it Fab 4 or whatever, Mag 7 minus Tesla. Now the rest of tech, you're going to start to see those robust earnings. And I believe this is really going to be the wake-up call for the naysayers in terms of what we see with tech, especially on the AI revolution, the second, third, fourth derivatives coming through with Microsoft, with Oracle, with others in software.
Well, they say that no two stocks are the same. So what's wrong with Snowflake?
Look, I think to me, it's really Palantir and MongoDB I view as the best plays from an AI perspective on use case. Snowflake, it's really been an execution story. I mean, that's why we've been more hesitant on that name till execution improves. I continue, the best ways to play the use cases is the Messi of AI, Palantir, along with MongoDB.
And who else? Anybody else that you're worried about?
Look, I mean, I'd be worried about the shared owners. I think that's HP, that's Cisco.
What is a shared owner?
A shared owner is basically like you have ones that are gaining market share and losing market share. When you look at Cisco and HP and some of these legacy players, they're giving away market share. And that's why it's Microsoft, it's Oracle. That's really, from a software perspective, they're the ones that are gaining share. And when you think about this AI revolution, it's just starting. We have $1 trillion to spend over the next decade.
I'll tell you, Oracle, by the way, hell of a story, because people counted them out. They're like, oh, just a boring database company. They really pivoted and have just kicked butt in that time quickly. Apple, they've got big robot dreams, right? They're like the Isaac Asimov of stocks. You don't like it.
It would be a horror show if they actually spent money on robots. Look at the failed EV initiative, Project Titan. They need to focus on AI. For Cook, his legacy is going to be AI. If they went after robots, that would be a black eye moment for Apple.